and hesitation to advance higher. In this report, we are to discuss fundamentals that could be affecting US stock markets, add a small comment for Exxon Mobil, and finally conclude with a technical analysis of the S&P 500. On a fundamental level, we note the market's expectations for the Fed to proceed with consecutive rate cuts in the coming year seem to intensify. The market expectations also tended to improve the market sentiment for equities, as the restrictive financial environment may ease somewhat in the coming year. It's characteristic of the market dovish expectations that currently Fed fund futures imply that the bank may proceed with 5 rate cuts in 2024, while some analysts tend to mention the possibility of even 6 rate cuts. Should the market's expectations for a considerable easing of the bank's restrictive monetary policy in 2024 intensify, we may see stock markets being on the rise once again and vice versa. The highlight of the week, though, is expected to be the release for the US employment report for November on Friday. Should the release take the markets by surprise, we may see it having ripple effects in US equities as well. If the data show an easing of the US employment market's tightness, adding more pressure on the Fed to proceed with rate cuts earlier, that could provide some support for US stock markets and vice versa. We have been keeping our eyes on the almost $16 billion merger announced by Exxon Mobil and Pioneer in the last days of October. The merger was a mega deal in the sense that it would magnify the potential of Exxon Mobil in a widening of the lower level of its verticalized production and distribution structure. Yet there seem to be headwinds for the deal, as the Federal Trade Commission has some concerns. It's characteristic that the Commission has requested for a second time details on the merger. Voices within the US Senate seem to oppose the merger, or at least be worried about the issue. Should there be signs of the merger actually being halted, we may see bearish effect on Exxon Mobil's share price and vice versa. In addition, we note that Exxon Mobil seems to expect higher production levels for 2024 based on forecasts regarding the Permian Basin and Guyana. The latter seems to be facing doubt, as Venezuela has been threatening to annex parts of the country in the past few days. The issue highlights the importance of Venezuela's action and its possible repercussions in the US oil market. US 500's price action remained in a relatively tight range-bound motion in the past week between the 4,500 support line and the 4,610 resistance line. Given also that the RSI indicator continues to run along the RIDI of 50, implying a rather indecisive market that may allow the price action to maintain its current direction, we maintain our bias for the sideways motion to continue for the time being. Furthermore, we note that the Bollinger Bands seem to widening a bit, in a sign that the price action may be slowly picking up a bit of volatility, yet the direction of the index next leg remains to be seen. Should the bulls regain control over the index, we may see the price action breaching the 4,610 resistance line, which was tested in the last days of July, and take aim of the 4,720 resistance nest. Higher than that, we also note the 4,820 resistance hurdle. For a bearish outlook, we would require the index to breach the 4,540 support line, which kept the index price action afloat in the past few days, and aim for the 4,465 support base. For a more extreme bearish scenario, we note the 4,400 support barrier. Thank you for watching.